Hello everyone, today is the 14th of July. We are in the third trading day of the week. So in this video, we are going to run you through our 5 most focused markets: the Euro, US dollar, the gold, Nasdaq, US oil, and Bitcoin. But we're also going to talk about the dollar index as well. So before we go into that, let's have a look at the Forex calendar on forexfactory.com. So for today, which is Wednesday, we already have the RBNZ, or rather the Reserve Bank of New Zealand rate statement, and we saw that they have started to taper their so-called purchasing program, and that has already helped the Kiwi to push upwards. And tonight we have the PPI as well, followed by the Bank of Canada monetary policy report, rate statement, and press conference. And into the midnight, we also have Fed Chair Powell testifies. So tonight will be very volatile again, but right now throughout the Euro session, it might be slightly less volatile. Nothing much on the European side, and that's pretty much for the calendar today. So let's come back to the chart and talk about the dollar index. So yesterday, after the inflation data, the dollar was kind of weepy, but at the end of the day, it managed to climb even higher, and right now it is right at the previous high already, slightly breaking out of this symmetrical triangle, but in any case, it is still at the top of the entire range we have right here. So the thing is that we are seeing that this is about to cover the gap we have right here, but to follow what we always do, we always want to sell when the price is at the top, because that's the top of the range, and because of strong resistance, we of course want to sell more than we want to buy. I mean, we don't buy at the resistance level, we sell at the resistance level. I mean, it's a very simple, straightforward principle. However, if today we were to see that the price went up and closed even higher, that tells us that the breakout is real and the dollar might continue to climb from there. And we want to understand that if we look at the entire market range, all right, for the past few years, the equilibrium level of the dollar index is somewhere at 95 to 96, and that just means to say that we're actually trading at the lower band of the entire market range, and so if there's a breakout of this consolidation, and that really might trigger more buyers to come in and eventually push the price back to the equilibrium level before we face stronger rejections or stronger sellers coming in from there. Alright, so that's for the dollar index, but as of today, we will still focus and see if we can get a chance to sell the dollar again. Alright, so moving on, we have the euro against the US dollar. Alright, so yesterday we were really looking to buy. Why? Because obviously at the bottom of the entire range, symmetrical triangle, already have a pretty good rebound, a decent rebound from here. But of course, I do remember that I did mention that it wasn't very strong enough, but I of course expecting pullback, which it did. But then the pullback turns into a downtrend, and it actually broke lower than the previous low, and so we were actually anticipating a head and shoulder right here, right, inverse head and shoulder. So if the price came down to this area, there is actually some support. Price did came back again, but after which it just goes all the way down again, and eventually this entire formation is not valid anymore. But however, right now we are still seeing support right at the bottom of the symmetrical triangle. This time it really touches the bottom, and the price has also rebounded off. And in fact, we even gave a trade call earlier in the morning to buy again, right? I mean, this is very foolproof, straightforward, because it's already at the bottom. It did not go all the way down and break even lower. And if there's support, then why do we need to? I mean, we don't even have to hesitate that much to go in. As long as we see there's support, price is starting to climb, yes, we can go in. So therefore, it's straightforward. So the trading plan still is to buy. If you haven't bought yet, well, not to worry, you're not too late. All right, stop loss just slightly below the previous low right here. Give it 10 to 20, about 20 pips away from the previous low, just so you have enough buffer. First take profit level. All right, back to this level again at about 1.1870, and then the final targets all the way back to the previous high right here, 1.1950, or rather this area. Right, previously we've been talking about this support area. All right, might have a lot of supply, so that price will be 1.1920. right, that will be the main targets, but otherwise, as it goes even higher, we can expect it will at least come back to this equilibrium level at about 1/2 flats. Right, so that is the trading plan for the Euro US dollar. Alright, and moving on, we have the gold. So as you guys know, the gold has been really whippy. What we are seeing right now, the lows are really getting higher. Price has been testing this the resistance at the top right here multiple times, and right now you are seeing a very steep angle where the price is going higher. If this entire range were to break out, because the consolidation has been taking for like about close to 2 weeks, and if it breaks out, this will be pretty strong. So this itself, you really want to watch out for yourself. All right, I mean, if there is a chance to give a proper trade call for this, I will definitely like, such as if it's able to break higher, close above, and for some reason it came down, right, giving us a chance to buy, well, that is when I might give another trade call to buy the gold. So the trading plan, if you were to buy right now, your stop loss will be somewhere right here. Your take profits, the first level you have to look out for is right here, 1924.25. This high right here is important. So that will be the first take profit level. And if it's break out, and if you break out of this entire consolidation, we might see a very strong movement upwards. First, take note of this moving average right here. As you can see, it does work from time to time. So that will be the final, or rather the main targets. But finally, we want to see all the way back to 1850 or even 1860 at the equilibrium level. That is where our final target is, because as you can see, and as I have already mentioned a lot of times, this entire area has no resistance. Alright, so a very good, so it's very possible once the price enters into this zone itself, right, it will just keep climbing up parabolic in a very parabolic manner. So there's the trading plan for the gold. Moving on, we have the Nasdaq. So the Nasdaq, alright, as expected, it just kept on climbing, very bullish. Not going to repeat what I've been saying about how well it has been supported by all the moving averages, but in any case, as of yesterday and up to now, we saw the price went all the way up. Alright, there's very little pullback yesterday, as you can see. Actually it did, there's a pretty strong one back to the middle of the rising channel, and pulls back all the way up, touches 15,000 and pulls all the way down. Of course, we are still going to look to buy the Nasdaq. I mean, it is still very bullish, no doubt about it. And right now in the 1 hourly time frame, in fact, it is already supported at moving average, previous high turn support level. Even if you were to buy at this price, nothing is really wrong about it, but you might just want to wait a little while, alright, into the Euro session and just before the US session. Try to get a price as low as possible. I would say that a revisit to this area will be pretty good, 14,800. So maybe just wait for a little bit of pullback. I mean, you can try to enter a little bit right here as it pulls back to this level and add a little bit more position. At least it is, supported within the this zone between these two moving averages. So that should provide us with a much better support. So that's the trading plan, and that's where we want to buy. So the trading plan again is to buy right here, hopefully back to the previous low right here, at about 14,820-ish. Stop loss to be really safe, right below the 252 moving average. As you can see, price does comes down and found support before it goes up. So that's where we want to set our stop loss to be very safe. But to be more aggressive, you want to be slightly aggressive, and if you decided that if it comes down, hit the stop loss, and you're going to buy again at the 252 moving average, you can set your stop loss slightly tighter, a lot tighter in fact, and that will of course helps give you a much better risk reward ratio. So it really depends on your trading style. Anyway, if you were to buy right here, your take profit first level, all right, back to this area, all right, as you can see, there's quite a bit of buy and selling right here. So there will be about 14,900, and the main targets, all right, back to the previous high. And in terms of the final targets, well, just be confident, hold it, just hold it all the way. I mean, when it trends, it can trend a lot. So if it pulls back, comes back again, I think it can go all the way. 15,200 can be your final target, but to be more conservative, 15,100. All right, not to be too optimistic, that would be pretty enough. That would be the final targets, but in terms of our main targets, back to the 15,000, that would be really fantastic. So that will be the trading plan for the Nasdaq. Alright, next we have the oil, WTI. So the price yesterday came all the way down, alright, found support right here, right at the previous low, as you can see. And then what's interesting is that if you put a Fibonacci from this swing low to this swing high, is exactly rebounded off from at the 61.8% retracement level. So, and then the price just went parabolic. So for today, all right, we are still expecting a little bit of pullback. We are still expecting the oil price to climb even further. In fact, the pullback right here throughout the Asia session might be enough for the price to go higher, but in any case, I think we want to focus on this entire area, because that is the neckline area of this entire formation, as you can see, right? So if it's able to come back and retest this zone, then we might have a much better price to buy the oil and have a much better risk to reward ratio. So therefore, the trading plan is to wait for the price to retest somewhere right in between, or say 74.6. Stop loss got to be slightly much higher this time, all right, at least below the previous low right here. And the take profit targets first level, all right, back to the previous high, 75.4. And our main target is back right here, all right, important supply zone, as you can see at the top. And in terms of our final level, all the way to the equilibrium level, 77. All right, so pretty straightforward. For the US oil, just be a little bit more patient and wait for the pullback. All right, I mean, if I were to pull a trend line, that will probably give us a much better idea where to buy. All right, so that is for the US oil. Alright, so last but not least, we have the Bitcoin. Alright, so for the Bitcoin, we have been trying to buy the low. There has been support, but eventually it came down, and as of today, we are still seeing the price going down, breaking lower and lower. So it kind of becomes very clear that the Bitcoin is about to go even lower, and potentially retest the low right here, or rather demand zone right here, right? So the trading plan for the Bitcoin this time around will be really straightforward. We got to understand that in the shorter time frame, all right, or rather maybe for the entire year, the Bitcoin is not going to be performing well at all. It might go even lower, as we have seen it based on the history. Bitcoin can go as low as 70%, 80%. All right, it's nothing uncommon at all. So that, and right now it's just at 55%. So why not that Bitcoin continues to grow even lower? And right now we are again seeing breakout of those little bullish structure, and So we are expecting the price to go down even lower again, but we want to understand that this demand zone is still very important and very relevant. So if it comes back down into this zone, all right, somewhere about 29,500 or maybe just 30,000 itself is where you can attempt to buy Bitcoin again. All right, don't worry that if it smashes down, it always happen. If it smashes down, it's actually good news. I mean, like if let's say the price just all the way suddenly went down, all right, you are seeing a very bearish candle coming down. Well, don't be afraid. Just be bold and buy. Is at the right position, right? When you push down so far, something is wrong, right? It's just trying to wipe out trades and stuff. So don't really care about it. Buy in, your risk will be very small, even if you hit your stop loss. So that, I mean, you just lose a little bit. But if you rebound off from here, you know well that the entire range is at the bottom of the entire range, and there's a huge upside even before it comes back to this equilibrium level. So the trading plan, right, we are just going to wait, all right, for the price to come down. So like I say, somewhere about 30,000, right, is exactly where we want to buy. You can even set the buy limits if you want. Stop loss right below, I would say it definitely has to be below 28,000 ish. So about this area we do. And first level, we can come back all the way to somewhere right here, because this is where the price break out of this channel, or rather trend line, or whatever that is. So there will be about 32,000. Our main target, right, will still be all the way back to the equilibrium, because by the time it comes back to this level, it should be somewhere touching the this trend line coming down as well. So that will be our final level at the equilibrium. So that will be about 36,000. All right, that's the final and the main target as well. So that is the trading plan for the Bitcoin. Alright, so with that, that's all for today. Thank you so much for watching. Hit the like button if you like what we do, and subscribe to our channel. So see you again tomorrow.